You know, Gene, how many accurate calls have you had on Apple? We can't even begin to remember. But let's just start talking about Carl Icahn. Does it mean anything to you as an analyst that an activist investor like Carl Icahn is now playing in this stock?
It does, in the sense that he can kind of inspire other people to get involved. And I think one of the issues that Apple has had, as we've been talking about, their big cash balance, the reality is that they can get more debt, they can do more things. And somebody like Icahn is just an inspiration that other investors, I guess, their voice will be heard. The reality is Icahn owns less than 1%, and he's got a history of being a shareholder activist, but I think that there's not a lot of substance, but it does play into investor psychology. It's a vote of confidence for other investors.
Right.
Now, Trish was telling us that Icahn is agitating for a larger share buyback funded with debt, the way that Apple did the first announced buyback. Whether it's an additional 50 million, 100 bill, excuse me, we've got to talk in billions here. Gene, how much of a difference does that make? If you were to throw an additional $150 billion of debt on Apple's balance sheet, does that change anything important for you about the company?
It really doesn't. I mean, financially, it's a smart thing for Apple to do. It wouldn't change anything. Your interest expense, obviously, you'd have interest expense. They don't have interest, don't have a lot of interest right now, so that would go up. But as far as the substance to the numbers, it would be accretive. So because of the lower share count. The math of this makes a ton of sense. The problem is that the reality is Apple moves very slow. It's like with their products. They're just these slow incremental improvements. It's kind of the same way with their capital distribution. And I wouldn't think anything big is going to come out of this over the next couple of years.
That's big, though, right? I mean, $150 billion. Can the debt markets even, you know, take that on? I mean, that's a big issue.
Sure they can. I mean,
what do you think, Gene? I mean,
well, I'm not a debt guy, but I think given Apple, what Apple is as a company, I think that they could raise $150 billion. I think, you know, you get startups that don't have any revenue that can raise $500 million, so I would expect that Apple could raise that money.
Well, what's interesting here is that Carl Icahn is the second high-profile hedge fund manager to push Apple to return more cash to shareholders. This has been one of the common complaints when it comes to Apple, and specifically its financials. Is Apple stingy with its cash?
Yeah, absolutely. I mean, you know, everyone knows about the near-death experience the company had in the 90s, and I think that really has, that culture is really ingrained in the senior management. I'm sure Cook has a lot of that in how he thinks about the balance sheet, and Peter Oppenheimer, their CFO. And so I think that they are stingy, and I think that's been one of the issues that investors have had with Apple.
Isn't that, though, because Apple sees uses for these cash that goes beyond, you know, earning a quarter of a percentage point of interest, which is pretty much what you get these days? Didn't Tim Cook testify to Congress that Apple actually does things with the money overseas?
Well, they do things with the money overseas. They got a lot of that cash overseas, as you said. But I think it's more about this mentality that technology moves so fast that you can never have a big enough war chest to defend yourself if the climate changes. And so I think that they're more than well reserved for that. I mean, they could buy up the better part of the internet with their cash on hand. And so I think it is to an extreme. So yes, there's a logical part to it.
You got to think about
extreme.
the timing here, right? I mean, because they've got a big announcement coming in September. That's weeks away. Gene, do you think Carl might benefit from some of the excitement that we might see surrounding an iPhone 5?
Yeah, I mean, he's playing us all here in some ways, that because he knows there's some events coming. He's probably owning this for the products over the next year and a half. I mean, Apple's going to have what we believe 2 new product categories, and ultimately I think that the timing of this, the chart starts working. He comes out with this tweet. On top of that, you have products. So the reality is the stock is going higher, and he's smart to be buying it.
But do you not share then some of the concerns out there that we've heard from other analysts and from Wall Street, that the pace of innovation at Apple just isn't what it used to be?
We don't share that. We monitor that, and I think that the pace is actually very similar to what it's been in the past. Keep in mind that 2 years ago, when there was expectations that the iPhone 5 was going to come out, this had been the summer of 2011, the fall of 2011, ended up being the 4S, and there was a lot of criticism around that time that was incremental. this idea that it's incremental, the iPhone has been incremental for the past 8 years. And so I think the reality is that this is Apple's pace. They want to do things with intense detail, and there's new product categories coming. And so my take is let's talk in 4 quarters and see what the pace of innovation is, because I think it's going to take a measurable step up.
Gene, I introduced you by trumpeting all the good calls you've made on Apple over the years. It's been a lot harder over the past couple of years. Back in 2012, you had a price target of $912. Now you're at $655. Will we ever, what is it going to take for Apple to become that $1,000 stock that it seemed not that long ago of having a good chance of getting to?
I think there are going to be 2 phases to the stock. I think the phase over the next 6 quarters is the product cycle phase. That one's the easy thing to really get back to, which is they're going to come out with these products that we're talking about, and people are going to get excited, investors, and the numbers should go up. To get it back to that $1,000 level or those ranges is going to take the belief from the buy side that this is an investable long-term story, that it can grow. And that inherent in that is a platform. And so they need to come up with more platform related, whether it's the digital wallet or something around content or some form of kind of a renewable revenue. I think it's going to be something in that tenure.
Do they need to make an acquisition, Gene? Do they need to make an acquisition to be able to deliver that?
I think they need to do a lot of little acquisitions, but I don't think they need to do anything gangbuster. I think that they've got the pieces to get there.